Hello and welcome to Genuine Learning Blog. My name is Melissa Galasso, and today we're going to talk about our newest GASB proposal, which is recognition of elements of financial statements. So this is something that we have been expecting. It's gone through several iterations, and we have landed on an exposure draft. So the exposure draft was issued on June 30. They just got it in before the end of David's term, and comments are due February 26th of 2021. So as you can see here, a very long comment period to enable all governments to be able to respond to this, because it is very important change to the conceptual framework. So again, this is a concept statement. It is not a GASB statement. So GASB statements are authoritative guidance. Conceptual statements do not establish authoritative guidance. However, they are the underlying theory that supports what ultimately becomes a GASB statement. We expect after probably short to come, a GASB statement, which would then apply some of what we're going to talk about today to governmental funds. And so this is the theory that they're updating, and then it would need to be applied to an actual standard. So as I mentioned, it is a conceptual framework, and we currently are using the current financial resource measurement focus and the modified accrual basis of accounting when dealing with governmental funds. There's a couple of problems with this that have been pointed out over time. The first one is there isn't a conceptual foundation. It's a series of random conventions that have been put together and rules as different things have popped up. They wrote a rule to be responsive to whatever questions came in. So instead of having an overall theory, it's just a series of accounting conventions. So the theory behind the current financial resource measurement focus was we would recognize an event when it was measurable and available, and that available always created a little bit of interest. That meant that the payment was received during the reporting period or soon enough thereafter to use to finance the expenditures. So this created a little bit of difficulty and lack of consistency between entities. Now, when we think about these, we are talking about two different things. The first one is the measurement focus. This tells us what items should be reported, right? So when we talk about the current financial resource measurement focus, it's only those short-term items. The basis of accounting determines when, right? So accrual versus modified accrual. They do clarify here that when we're talking about the economic resource measurement focus, they're not making any changes to the standard, but they do clarify here that anytime you're using the economic resource measurement focus, all items that meet the definition of an element are going to be within that. There's no subset. It's just the entire set of potential elements would qualify. On the other hand, the short-term financial resource measurement focus, which is the new replacement to the current financial resource measurement focus, incorporates only those short-term items. So it incorporates outflows of short-term financial resources and inflows of short-term financial resources, and all short-term financial assets, deferred outflows of resources, liabilities, and deferred inflows of resources. And so this is going to be very important. You're going to notice here that focus on financial resources and on financial assets, and we're going to take a look at what that definition is going to include. So when we think about this, it is going to be called an accrual basis of accounting instead of modified accrual, because we're not a series of random items put together and there's a theoretic basis behind it. They determined that the term accrual basis would be appropriate when used within the context of the short-term financial resource measurement focus. And so a little bit of change from the prior proposal, which was a preliminary views document. Elements arising from short-term transactions and other events are recognized when they occur. Elements that are from long-term transactions are when the payments are due, and this is very important. So what is a short-term transaction? A short-term transaction is those events for which the period from inception to conclusion is 1 year or less. If you remember the preliminary views document, they had proposed that it would normally be settled. So you can see here that they backed off of that concept of normally. And if the entire span of this, so for example, accounts receivable, if it's a 30-day period from inception to when you're going to be paid, right, that is a short-term transaction. You would book accounts receivable then when the transaction occurs. On the other hand, these long-term transactions, so say a note payable that's for 5 years, right? Well, then this is from inception to conclusion is greater than 1 year, right? So a long-term transaction is going to be more than a year. Not normally, as they had previously proposed. They took away that normally and really are looking at the substance of the transaction. In those scenarios, those long-term transactions would be booked when the payments are due. So very important change here. If it's not due for 5 years, then it would not be recognized in the short-term financial resource measurement focus. You noticed in the definition of what types of elements we're going to see here, we have financial assets and financial liabilities. So financial assets include cash, assets that are available to be converted to cash, and assets that are consumable in lieu of cash, right? So that's the definition that we're going to be using here for financial assets. And then all liabilities in this focus are going to be a financial liability. The other thing that it clarifies, again, this being a conceptual framework, is the timing of recognition. So an item should be recognized if it meets both of the following. First, the item meets the definition of an element, right? So thinking about concept statement 4, within that context of the short-term financial resource measurement focus and the accrual basis of accounting, if it meets the definition of an element, again, thinking about those short-term type transactions, and the measurement is sufficiently reflects the qualitative characteristics of information in the financial reporting, right? So that's going to be the criteria for when you would recognize. The last thing that they put in this proposal was regarding the hierarchy of GAAP. When they issued GASB 65, they introduced a hierarchy. However, they introduced it in a GASB statement. Again, that's authoritative guidance. Really, the hierarchy of GAAP really should be in the conceptual framework. So the hierarchy of the elements, how do you make the decision of what something is, really should be in the conceptual framework. And so they're moving it out of GASB 65 and putting it back into the concept statements where it really should have been all along. All right, so that was a quick and dirty update on the conceptual framework. Again, we expect a GASB standard to be proposed again as an exposure draft this time. So we've already had an ITC, we've already had a preliminary reviews document. Now it's time for that exposure draft, which is the last phase of proposal prior to becoming a final standard. So we do expect a standard, a GASB standard, which would be authoritative guidance, taking this conceptual framework and then applying it to governmental funds and other things that they're going to incorporate into that standard. So this is just phase 1 of a multiple phased approach. So thank you guys so much for joining me, and I hope to see you on a future blog. Have a great day, guys. Bye-bye.